Bharat Forge has also reported its quarterly results, and the management, Mr. Baba Kalyani, who's the CMD at Bharat Forge, he's in Mumbai. He's going to address the press, media, analysts very shortly. They're just setting up for the interview for the press conference there. We'll cut across to that once I think he's starting to speak.
Just give you a few highlights of the company's performance for the year, both on a standalone and consolidated basis. We've had a strong growth in standalone income, growing about 26% to 3,725 crores. We had export growth of more than 42% to 1,742 crores. EBITDA margin has been strong at 26.2%, which is an improvement of about 70 basis points over last year. We have a 38% growth in PBT before exceptional items of total amount of PBT was 617 crores. We have a provision towards impairment of our investments in our US subsidiary of 70.4 crores, a PAT of 362 crores, which is a growth of about 16.5%. Our return ratios, both of ROC and RONW, have grown fairly well over last year. And our non-auto business, which has been a strong push area for the company, has grown by about 32% over last year, and is now standing at 38% of standalone revenues. Our percentage of value addition in terms of machining has also increased by about 500 basis points to 45%. On a consolidated basis, total income grew 24% to 6,368 crores. Our EBITDA grew 27.2% to 1,085 crores, and PAT after minority interest grew to 413 crores, which is a growth of 42%. In terms of outlook, I think we'll come to the outlook when we do the Q&A portion.
Maybe I can add a little bit on the consolidated results. This was standalone. On the consolidated basis, income grew by 23.6%, close to 24% to 6,368 crores. EBITDA grew by 27%, 27.2 to 1,085 crores of rupees. And PAT after minority interest saw a growth of about 42% at 413 crores. So all in all, a fairly good performance operationally, except for the impairment charges that we have taken for our US business, which largely is a non-cash expenditure, just reflecting the losses that we have provided for in the last couple of years in our books. In terms of maybe a few comments on outlook, I think we are seeing a lot of volatility in markets on account of the European financial crisis and on account of what is happening in the Indian marketplace. But in spite of that, we believe that as a company we will see a growth on a YOY basis, largely focused on the non-automotive business, which I think will grow even this year, and the value addition that we are doing in terms of our facilities for this business, which will also see growth coming this year. China and Europe continue to be volatile. Chinese automotive markets are in a downturn, at least for the first 2 quarters. There is hope that in the third and fourth quarter things will improve. Europe, we don't know. I think we have to wait and watch till a solution to the European financial crisis comes out. But the good news is all our businesses in Europe supply largely into Germany, largely into high-end cars, and the German and the Scandinavian businesses, which are still running quite well. It's the southern part of Europe that's got more affected, Italy, France, Spain, and places like that. So this is key summation of our financial results. I think details we'll discuss in the press meeting. Thank you.
Sir, Karthikeya from the business. We made a provision for North American operations towards impairment of investment. Have you made provision all of the thing or some left for next quarter?
Well, the provision is made based on what impairment we see, which is substantial part. So it really reflects the losses that we have made so far. So in relation to our investments there, it's almost, I think, 80% of our investments, roughly. Approximately, I would say.
This is financial accounting.
It's a financial accounting. If you make losses in a business, you have to
Write down the value of your
write down
investment.
the value of your investments.
To that extent.
So what is your outlook really for the US operations? Do you see them
We are looking at getting the U.S. operations restructured. One thing is clear, we don't want to put any more investments in that business. So we will look at how to restructure it. That's the reason why we have taken the impairment hit right now.
But our business to the US market,
It's very
which
strong.
is exports out of India, are very strong and continue to grow. And we expect this to be a good year in the US.
So when you say restructure, what do you really mean?
I think I can't really tell you more than that. Okay.
So can you give us a sense on the margin picture? How do you expect it to pan out?
As Amit said, in the year FY12, we saw about
70 basis.
70 basis point improvement in our EBITDA margins, which was, I think, a fairly good achievement looking at the tough year that the Indian economy has had in terms of cost pressures both on energy front and on the commodity front. Largely this has been done by compressing costs, controlling costs in-house and increasing value addition and
Efficiency.
and moving more and increasing productivity and moving more in the non-automotive space. I think going forward we will continue to see this trend. We continue to expect our EBITDA margins to improve in FY13. Quantum, I can't put an exact number on it, but the trend is positive. And why it's a good news is because in the last 3-4 years we have had reverse. We have had margin compression, and now we are seeing some margin expansion. So the strategy is beginning to pan out in terms of non-automotive, in terms of value addition, in terms of what we are doing in operational efficiencies. Things are beginning to work out.
And ramping up capacity utilization and productivity very significantly. We've invested over the last few years and now we're ramping up the production in these facilities.
Managements are almost always optimistic and positive. And here we have the management, Mr. Baba Kalyani, they're also talking about how exports are likely to pick up, everything else looks rosy. There has been a one-time loss of 70 crore rupees and that's the reason you've seen profitability drop. It's almost halved on a year-on-year basis, but still the stock is up 1.5% right now.
Do you have the NDTV Profit app? All the markets, all the news and your own homemade, ready-made portfolio available there for you.
We will right now answer what you should sell, what you should buy when markets are down.
Download at ndtvprofit.com/apps. Get the best app from the channel you trust.